Hello fellow traders and welcome to the new series. In this particular series, what we're going to be covering is about 100 trades on how to use this particular system more effectively. We're going to be talking about a lot of different things: market dynamics, principles, tactics, tricks of the trade, and things that you need to be looking for when you're actually trading the Forex market. Now, if you're new, pay close attention because this system was actually designed for advanced traders, money managers, and other professionals. So if you have any questions about this system or trading in general, please don't hesitate to contact us. You can reach us at the Forex Help Center, or you can also reach us on Skype. Also, feel free to comment below on this video if you have any other suggestions or things you might want to know about. Let's go ahead and get started. Now, one thing about this particular series is that this series is not scripted. We're not cherry picking our trades. I don't know what's going to happen. That's the beauty about it. Unlike a lot of the videos you see out there by other wannabe professional traders, they cherry pick their trades and, edit what they want you to see or don't see. And in this particular case, as you can see, we started a nice fresh account so that way all the history will be there. And we're going to do all these trades one by one. We're going to go through, like I said, the whole entire batch. We're going to try to complete about 100 trades. And after that, we're going to go back and analyze what the profit ratios were and where we stand as, what we're doing, where we're going with our account equity curves and stuff like that. And if you pay attention, take note, and apply yourself, I reassure you, you will be up to the same trading level skills that I have and that my team has. These are the same exact tools we use. A lot of people come in here and they're like, oh, I need something that makes me rich overnight. You know what I'm saying? You got to apply yourself, people. Don't come in here thinking you're just going to get rich overnight and all this stuff. The Forex market is very complicated. There are some extremely smart players on the other side of that screen, people like me, who we make a profit when other traders make that mistake. Okay? Trading is a zero-sum game. For every winner, there is a loser. So the more newbies that come to the market ill-prepared, using crap that does not work, looking for patterns that do not work, you're going to lose. We're going to get you. We're going to run your stops. We're going to be on the opposite side of those trades. We're going to make the money. If we're not making the money, the broker's going to make the money because they're going to be trading against you anyway. So it does not matter. It's hunting season. So if you want to have an advantage, you got to have the right tools. You need to get the right trade partner to mentor with, people like us, who are going to show you the right, correct way to do it. And one thing I want to bring attention to anyone watching this series is that the problem with a lot of the video tutorials on the internet is that they're talking about shit that happened in the past, or they're talking about stuff that hasn't happened yet, way in the future. Like if you ever go on the forums, you're going to notice this. Everyone's talking about where the price is going to go tomorrow, or next week, or next month, or what, nobody talks about now. And that's what this entire series is about. It's about what's going on right now. I don't care about tomorrow. I don't care about tomorrow's report. I don't care about the jobs numbers. I want to know what happened right now. I don't care what happened yesterday. I don't care about yesterday's high. I don't care about yesterday's lows. I don't care about yesterday's news report. I don't care about what war got started. I don't care. It does not matter. All that matters is what the market is doing right now. That is the fundamental principles, core of what this whole system that we do, our method, that's what it's all about. It's all about now. The future is not going to give me a profit. The past is not going to give me a profit. The only thing that's going to give me a profit or a loss is what's happening right now. So we're going to trade it. We're going to trade by our rules. And if we stick to these rules, we should make money. Period. Too many gurus, system sellers got all these damn rules on how to enter. Look for this, look for that. If this, if that. Change your settings to this, change your settings to that. They send you in this whirlwind of BS. And then as a trader, you're scratching your head like, what the just happened? Do you know what I'm saying? So let's cut the crap. Let's navigate the markets correctly. Let's get your lesson. Let's get you educated correctly the first time. And hopefully you stick around long enough to watch how we do it. So I need to stop talking. And I need to get in this trade because as I'm talking, I'm watching the market leave without me. And I'm getting kind of, excited. So let's go ahead and get in these trades, all right? Let's go ahead and fire up our Octave. Let's see what it's telling us, and let's go from there. So what I want to do is I want to go ahead and go into my members login. And if you don't have an account, you can always use the trial version right there. Right here, this green button right there, that'll go ahead and get you in. But right now, I'm going into the members area. All right. What I'm looking at right now is on the Euro Yen trade. So I'm going to go ahead and navigate up here. I'm just going to open it up as a new window. Okay. Right now, there is an active trade on that particular pair. I'm going to use a couple different studies throughout this series. You should be familiar with these studies, but if not, I'm going to use them just to help you get up to speed, just in case you're new to trading. And in this particular one, this study here is called Fibonacci, and unfortunately, I want to say damn near 95% of all the videos I've seen online about how to use Fibonacci are ass backwards wrong. I've seen a ton of gurus, I mean, they sound real convincing. You use Fibonacci like this or use Gartley pattern like that. The problem with that is when they show these examples to you eventually after the market's made its move, it's hindsight. It's easy to say, oh yeah, look what happened. See, there's the pattern. That's where the price went, blah, blah, blah. But try to do that in real time. It ain't going to work so well, okay? Now, the reason I will use fib levels as a psychological level is only because I can back it with my Octave. With my Octave, I can actually see the true condition of that particular fib level. So I'm going to go ahead and kill that because I really don't need it. I was just showing it for reference. And what I want to go ahead and do is my optimal entry for this particular trade, I'm thinking I want to get in right about 129.35-ish area. So what I'm going to do is I'm going to go ahead and set me an order to get myself in right about there. Alright, I have my order in place. And if you see these white lines on my chart, that's just where the new day started at. I just keep it like that for a quick reference. Now, some of the trading rules that are good to use is the halo should be over 100 and your octave bar should be at least 90 or better if you're looking to get into a good trending move. Now, if you're a scalper, which I don't care how good your system is, I just recommend you do not scalp unless you're really good at placing your stops and you don't move them. Then you can also scalp with Octave. When scalping with Octave, you want to be scalping when this arrow here is pretty much in the yellow right here. You want it in the yellow because this is when the markets are ranging correctly. And if this is less than 100, like around like 75-ish or something like that, and this is like in between the yellow and the upper red bands right here, and the green bands on this side, yes, you can scalp the markets. Now, when you scalp the market, it's very important that you pay attention to how big your range is, because sometimes your ranges don't support a lot of profit. Sometimes you might only be able to get 3 to 5 pips out of that trade. So keep that in mind, because a lot of people are like, oh, I want to scalp, but then they lose sight of why you're scalping. They sit there and be like, I want to get 10, 15, 20 pips. Well, that ain't scalping, okay? Scalping is when you're just in and out for fractions of a pip or a few pips, and you rinse and repeat over and over again. But when you're scalping, make sure you're paying attention to the octave bar to make sure the trend has not changed on you. Because if for some reason you see it start to wobble back into the higher ranges, 80 plus, it's time to change your trading tactics, or you're going to blow yourself out of the water. So let's go ahead, and what I'm going to do is, I think I'm going to go ahead and enter in a little bit earlier. But since I'm entering in earlier, and this is not my optimal entry, I'm going to enter a partial entry on this particular trade. So I'm going to go ahead and dial down my lot size, and I'll go ahead and get in right here, and we're good. So what I'll do is I'll let this marinate for a little bit, and then we'll come back and check on this particular trade, and we'll go from there. I'm going to go ahead and widen this window up a little bit here so we can see our positions better. Okay. Alright, so for now we'll go ahead and manage these trades right here. Now the idea is to not marry a position. You don't want to sit there and hold that position forever and a day. I'm personally what's called a high frequency trader, which means I'm just in and out all damn day. It doesn't bother me what the trend is or the market or anything for that matter. I'm just there to make money. Now some people like to sit to a particular style, which is fine, you know, but if you want to have an edge in this game, you need to learn all the different ways and various methods of how to trade the market. Or you can just stick with a basic simple strategy using Octave, and you can follow that and do quite well. And I have lots of members that they keep it real simple and they do fairly well. So what I'm going to do is I'm going to start looking at my charts now, and what I'm going to do is I'm going to go to the Euro Yen, and that seems alright. That one's good. I'm going to go ahead and kill this limit order I had sitting right here for now, and I'm going to book a little profit on this one. So I'll grab that right there, and then I'm going to go to the Aussie dollar, and we'll snap some down on that too. And while I'm waiting on that, I'm going to go ahead and rotate over here on my rounds. I think I'm going to wait for this one to pull back up over here. So I'm going to throw me a sell limit in case I miss something. Go over and check my GDP trade. And I'm going to go back and check my halo. 122. Power downtrend. I think I'm going to capitalize on this particular move right here. On that next bounce up, I'll try to catch a little bit extra. Let's see what's happening on my Euro Yen trade. Got a nice channel right here, so I'm going to grab that. I'll write that one back up. Now, one of our rules is if you see this octave bar drop below 77, that's kind of like the line in the sand. That's where things could start to reverse on you. So it's really important that when you see it drop below 77, that doesn't mean just jump out the trade. That just says, all right, something's changed in the dynamics. Be careful, because this could be the end of a trend, and this could be the top of a move. So it's important to just keep an eye on that particular setup. But in this particular case, I'm getting in on a calculated risk only because I'm looking at this down here, and this is basically a channel formation. This bounce here, and then that bounce there, that's support. So I'm paying attention to that right there. Now I'm going to zoom out a little bit more. As you can see, the market kind of flew up a little bit, and then it bounced there. But now what I want to show you is I can also draw a line here. So this is a channel. Now if the halo keeps it up, this is most likely going to turn into a breakout. So right now we want to keep an eye on that. Just keep that in mind, that that right there could be a breakout. So I'm going to go ahead and do my rotation over here on my trades. I got some money on my Aussie dollar trade over here. So I'm going to go back over here and check this out. I want to go check out my octave again. Alright, it's still below 77. We're at 75. So I think I'm going to just go ahead and book me some of that right there. There's money on the table. Might as well get it. Alright, so I'm out of that trade there. And then I want to go back and check out my GDP. Alright, that's looking good. Let's go ahead back again. Check our octave. 134. We're right over the 77 threshold, which means this could pick up. You know what I'm saying? We don't really know. We're just in it to get it while we got it. So on this GDP, I'm just going to go ahead and book that too. And then I'm going to go back to my dollar yen. Again, we're kind of below that little threshold that I like, that little safety net. So what I'm going to do is I'm going to go ahead and go back, check that one more time. We're kind of sitting in the middle of the no man's land on the channel. So at this point, it's like a judgment call. What do you want to do? Now, when I enter this trade, it's basically dollar cost averaging. And if you come from the stock markets or anything like that, or old school, you've heard of that term before. If you want, you can also Google that, dollar cost averaging, and learn more about it. But it's a way of basically, if you got in one position and the market kind of moved against you, you can add a little bit more to it to bring down your average entry price. Now it's important that there's a fine line between averaging out a tight entry and just adding to an outright loser. Because I know a lot of people do that. The market will be down against them like 100 pips and they're still adding more to the position. You don't want to do that. That's counterproductive. You can blow your account like that. So don't do that, alright? So now what I want to do is, I got to keep in mind I got two positions right here. And one's going to go more profitably before the other. So what happens is I'm going to close out both of them. One with the profit, one with the loss, but at least it brings down my average. But for now, I'm going to let them two marinate. And we'll go back over here and check to see what else we can get on our trades over here. So let's go back over here and check what we got. Alright, got another power trend. I don't see nothing just yet. So what I'm going to do is I'm going to wait. I want to wait for a pullback on the British pound. I want it to pull right about here. And I'll jump back in that too. Let's see what else we got. On the Euro Yen. It's a strong sell on that one. So I'm just going to go ahead and take advantage of that. Let's go ahead and get some of that right there. And okay, I got a nice little pullback right here. So I think I'll go ahead and give me a little bit right there. Now keep in mind, the octave system generates its own trades up here. The system makes its own trades, But these functions have been put in here, the bar and the halo, which between those two gives you all the information you need to generate your own trades. So always keep that in mind. You can always do your own thing while you're waiting for the system. Now what I want to do is I also want to check to see if there's any news announcements coming out that might adversely affect the market. So let's go ahead and get out a quick check. Alright, I'm checking out the news scene right here, and these are the things that can make the market do some random stuff. We got a lot of Fed activity. We got some GDP activity. So this should get the markets jumping today. And it looks like all the fun will start in about an hour and some change. And by then we've probably made all our money and been done with all this stuff. So alright, looks like this trade's about to go active right there. It just did. So that one right there, this GDP just went active, and that's that one down here. We'll go ahead and finish off our averaging on this one, and I'll do my last averaging on that one, and on that Aussie dollar. Okay, we'll go ahead and finish up that one. Now keep in mind, I have a fairly large account, so don't get stuck on my drawdown, because it ain't really much of a drawdown when you got to count this size. That's nothing. It's a drop in the bucket. Now if you got like a little small $10,000 account or something like that, you guys are probably holding your breath like, oh my god, he's down. You know, I'm down like not even literally a % of this account, so it's nothing. So just keep that in mind. I myself am using proper money management, and it's up to you to use your proper money management. What I'm looking at when I'm doing this trading here, I'm looking at the pips I'm actually getting. Because a lot of people get stuck on how much profit they're making dollar-wise. Don't worry about the dollars. You need to be looking at the pips. How many pips did you actually earn? Because you can always trade your lot size exponentially and earn, you know, more profits. It's just the key is how many pips. Okay, so keep that in mind. It's a really, really important lesson. Worry about percentage. What percentage return did you get on your account? Because I know a lot of people get distracted and they'll be like, hey, look, I made $10 million. Well, how many pips did you take you to get that $10 million? They tell you, oh, I got it in 1 pip. Well, obviously they're over leveraging their freaking account, so you don't really want that. Somebody said I made $10 million, and it took me 10,000 pips. Okay, that's cool. That lets me know you got a good system to get to that amount. So keep that in mind. All right. So right now we got this right here doing its thing, and let's go ahead and come back over here and see where we got to collect that. Alright, euro yen. Alright, on that euro yen right here is looking good, so I'm gonna go ahead and book some of that while we got it, and I'll take that 200. Give me that monopoly, do not pass go. Give me my 200. Alright, this looks good right here, and we'll go ahead and collect on that GDP. Give me that. Thank you. Alright, so right now what we're waiting on is our CAD trade. And it's just sitting there. Alright, that's cool. Like I said, you get a lot of these gurus, like they come on here and they be like, oh, follow my system, do this and that. But it's like, why don't you show me step by step, trade after trade. Don't cherry pick none. Don't edit none. Let's see this raw. Let's see this live in the market. Don't just show me just one good trade. You see, I want to see action. Show me the money. Show me the trades. That's what I'm bringing to you. Because I know you can do it. You might got some bad trading skills. You might have read the wrong book, hung out the wrong forum, read the wrong thread, listened to the wrong cat. It happens. Even your broker will give you bad advice. Trust me, they don't really care if you make money or not. They don't care. Nobody really cares. This game is cutthroat. It's a zero-sum game. And the guy on the other side of that trade, he ain't your friend. He wants you to lose your money. He wants you to blow your account into his account. And as long as everyone's using shit rules and crappy indicators and EAs and everything else, it's a feast out there for traders like me. Because we know the systems that you're using. We know you're using crossovers. We know you're using moving averages. We know what your EA settings are most likely set to. We already know this stuff. So we can adapt our systems to capitalize on stuff like that. And the only way you can beat that is to have the systems that are designed to defeat all that other stuff. Now, what I want to go ahead and do is I want to go ahead and look around the markets. So what I'm going to do is I'm going to go check out some other pairs and see where the other action's at. Now, if you're new to trading, stick to one or two pairs. Don't bounce around. I'm only bouncing around because I'm an expert at trading and I know a lot about the characteristics and attributes of these pairs. So I'm comfortable with getting into multiple positions. But if you're new and you have a smaller account, do not overtrade multiple pairs at the same time because that is bad money management. You're overexposed, you have too many positions open. If the market was to do something radical, you can risk blowing your account, so do not do it. This video is only for learning and examples only to get your skills up. The halo is now cruising at 129. So I'm going to go ahead and open up me some more positions right quick. Now I want to show you something. I'm going to show you just how much I have faith in Octave. I'm actually going to open positions up without even looking at the charts. Just by studying the halo and the bar itself, I'm just going to open up my positions based on that. But don't worry, in the rest of this series I will open up charts for you. So my first trade is going to be the dollar yen. And that's going to be a buy trade. My next trade is going to be, I'm going to hold up on this one. Yes, it's a power trend, but I don't want to really get in on 100. I want to get kind of back on a pullback, so I want to try to time this on the 80-ish and get in on that one. My next trade will be, let's say I got the Aussie dollar. Okay, that looks nice. So I want to open up a sell. And GDP. Grab me a sell on that one. These ones that have 100 already in the price, I'm gonna go and just check their charts right quick. Hello traders, this is JP the Architect. I am back online. It is now Sunday, and right now what I'm doing is I'm going ahead and checking on those positions that we held over the weekend, that we opened up last Friday, using the Octave system. So what I want to do is I want to go ahead and check my charts and make sure I haven't blown anything to hell. So far things still look like they're breathing, so that's a good thing. So what I want to do now is I want to go ahead and fire up my Octave and see what Octave has got to say about the markets, and then we'll go from there. Let me go ahead and log into the system here. Alright, I'm logged into the Octave system, and right now we got some, oh boy, we got a weak downtrend on the dollar yen. Let's check the dollar in this one. Alright, let's go ahead and check the euro yen. And what I'm looking at is only this part right here, the advisor and the Octave bar. These are the only two things I'm looking at. Oh, and also the halo. Because right now, any alert that I'm seeing here that says expired is because of those are the last trades that we did at the close of last week. Alright, so what I'm going to do is I'm going to go ahead and shut these trades down. I'm going to go ahead and book some profit. And then we can go ahead and just start the new week fresh. Wait for some new trades to come in, you know, and do what we got to do. So I'm just going to shut all these down, collect my money. We got a mixture of positive and negative trades, which is fine because overall, arrogantly, we're still in the green. Way in the green. Alright, so I got everything shut down. And all we gotta do is just sit back and wait. If you got any comments about this video, like it, share it, get back to us. If you got questions in general about trading, you can reach us direct on Skype, forexhelp.center, or you can reach me at support@forexhelpcenter.com. If you need access to the software, anything, whatever you need, just let me know. Me and my staff, my team up here, other traders for support, you know.